This episode of Profiles in Risk is sponsored by IAPath. IAPath, unlocking your adjusting superpowers. Go to iapath.com.
This is Profiles in Risk. Hosted by Nick Lamparelli. Every week, we interview those who risk life, limb, fortunes, career, and reputation, and those who work behind the scenes who look to protect and enlighten us about risk. You can find the show notes and other insurance-related content at insnerds.com. That's insnerds.com. Now, on to the show.
Hello, everyone, and welcome to Profiles in Risk. I'm your host, Nick Lamparelli. On this lovely spring afternoon, I am pleased to introduce Chris Downer. Chris is currently an associate at XL Innovate, a global Insurtech venture capital firm, from which he has a daily Insurtech newsletter that I will put on the show notes as a recommendation for everyone to read on the ins and outs of the Insurtech industry. He is also a board observer to two Insurtech firms. And prior to that, he was an associate at Goldman Sachs in their alternate investments division. Say that 5 times fast. Chris, how are you?
I'm well, thanks. Thanks for having me, Nick.
Chris, I love your newsletter. I saw you at the Insurtech Rising conference in Boston. I wanted to reach out to mention that to you. It's must read. Just for the sake of the audience, before I point them to your newsletter, in your own words, can you describe what you do?
Sure. So thank you for the plug on the newsletter. It's definitely something that takes some time out of my day, and I'm glad that people are reading it. So at XL Innovate, we invest in Insurtech. XL Innovate is an Insurtech-focused venture fund whose sole LP is XL Catlin. The fund has been around now for 3 years, and across those 3 years, we've made 12 investments, again, all in Insurtech and all in the P&C space. So we don't do anything in life and health. We invest primarily in the seed and Series A stage. And I guess as we think about our investment purview, we really think about investing in 3 silos. One is investing in companies that are addressing underserved or emerging risks. Another is investing in companies that are bringing disruptive business models to the insurance industry. And then the third is investing in companies that provide data analytics capabilities to the insurance industry.
So you're the second quote unquote investor that's come on to Profiles in Risk. And a lot of the audience is extremely intrigued. We'd have probably some listeners that are doing startups, some that have thought about doing startups. So, when you're thinking about Insurtech and you're thinking about startups, could you walk us through how you're thinking about the investment itself? How are you positioning the opportunity and determining whether it's going to be successful or how XL Innovate may participate in that? What's your thought process?
Sure. So the Insurtech landscape is awfully large today, so there's a lot to keep us busy. As we think about narrowing that funnel and understanding which companies we want to do more diligence on and then ultimately invest in, it really comes down to 3 pillars. So we like to invest in ventures that are providing truly innovative products or technologies, and not simply ones that are replicating or marginally changing the status quo. We also place a big importance on the entrepreneurial management team. So we want to see teams that have experience building companies, that have experience within the insurance industry, but then also have the ability to be nimble and react to new information and change in order to get to a successful outcome. And then the third and really one of the important things we think about as well is value. So companies that are providing a value to the insurance market is critical. Ultimately, we want to invest in companies that are, again, providing this transformation, but providing value. And if they're able to provide value, then they should be able to scale into companies that can provide a strong return on investment for our money.
Yeah. So what's interesting about XL Innovate is that you are an insurance play, that you're being backed by, an insurance company, so to speak. And so there's some expertise on hand, which is very different than a lot of VC firms that are jumping into Insurtech. What kind of advantages do you think it has having that insurance expertise? Because I think a lot of tech folks will say, well, insurance has been wrong for so long. It's really important to wipe the slate clean and start with a fresh approach. So what's the advantage that XL Innovate brings to the table by having that insurance expertise?
Sure. Yeah, no, I recognize that I'm in a very fortunate position to be working with XL Innovate and to be working very closely with Tom Hutton and Martha Notaris. Tom Hutton was the CEO of RMS. And really, as we think about the Insurtech landscape, RMS was really one of the first Insurtechs out there and was an Insurtech before Insurtech was even a word. And Martha Notaris got to know Tom as part of the Daily Mail Group. The Daily Mail Group bought RMS, and Martha served as a board member for 10 years there. So they have a lot of experience on their end growing within the insurance industry and growing companies as well. And then we also have some good resources within XL Catlin too to be able to provide to entrepreneurs in the market. But really, I think as looking at the Insurtech landscape and understanding what's important with our insurance expertise, it's understanding insurance. You can't really invest into an Insurtech if you don't understand the problems they're looking to solve. And so understanding the problems and the solutions is critical, but if you don't speak the language, insurance is awfully complex. And without speaking the language and knowing what the issues are and understanding what people are looking for and understanding what efficiencies are important, then it's really hard to get a grip around the space. So we feel as though we're in a very fortunate position in that sense that we've got a lot of people that speak the language. We can leverage the resources of XL Catlin to really dig further on understanding these investments and understanding these problems and hopefully coming to good conclusions as a result.
Does that include potential use of, paper and the ability to write coverage through XL Catlin?
Yeah, so XL Catlin does participate in the reinsurance facility for Lemonade as an example. And so absolutely where XL Catlin can be closer to our investments, we certainly look to make that happen. That is not a prerequisite though for our investments. So our goal really is to make a return on our investment. Obviously, where we can find strategic alignment, whether that be through a business partnership or through underwriting, providing capacity, that makes it all the more easier for us to pursue.
Yeah. Would you term this particular market as it is today frothy? I'm seeing so many articles, so many ideas, people even reaching out to me, lowly me, asking for, advice on whether ideas would withstand, scrutiny from an investment firm like yours or, try to poke holes in them. And I feel like that's probably a sign if they're reaching out to me, how desperate are they? So how would you classify the current state and health of the Insurtech investment market?
Yeah, no, it's certainly robust. And as we look at the number of opportunities out there, we think about the Insurtech landscape as anywhere between 1,000 to 2,500 companies. So there's a lot to keep us busy. Absolutely, there are a lot of Me Too's coming into the market today. So we're seeing a number of renters insurance companies coming in, a number of distribution plays, et cetera. And to us, really what's important is understanding where's the differentiation, where's the barrier to entry, where's the defensive moat as it relates to these companies. And so that's something that is, I think, we grapple with on a daily basis. Absolutely, there's a lot of interest within insurance. People understand that insurance carriers and the insurance ecosystem is really encumbered by legacy technologies and legacy processes. So there is a lot of room for innovation. And we welcome that. We absolutely look forward to seeing people come in with new and interesting ideas, and hopefully they're addressing big problems and can provide solutions that can scale. But our job as investors within the space is to have a discerning eye and to understand what can really make a difference and what can really provide an innovative and transformational solution to the insurance industry. So we're excited about the attention that the Insurtech movement has gotten, and we think that there's a lot of room for it to run. So while it is somewhat frothy today, I think if you look at the penetration within the commercial insurance space as an example, it's still quite small relative to the broader Insurtech ecosystem. So we're looking forward to seeing the commercial Insurtechs grow and looking forward to hopefully investing in some of them.
Are there particular areas that are hotter than others or more interesting than others? You just mentioned, the room for improvement in commercial, which I would absolutely say exists. versus, let's say, personal lines? Are there particular sectors or areas or new technologies that are of particular interest to you?
And we'll get right back to this episode right after a brief message from our sponsor. I am back with Chris Stanley, founder of IAPath. Chris, IAPath can handle individual as well as corporate adjuster trainings. What is a typical class size?
Nick, with the technology that exists for hosting classes online, we can hold hundreds of students per class. But at IAPath, we wanted it to be more personable. If we're going to sign off saying a student is competent, then we need to actually get to know the student. And we can't get to know the student if there are hundreds of people per class. That's why we keep our classes to under 20 registered students, and our certified partners are confident that we know the student and that student knows their stuff.
Learn to write auto, heavy truck, and other claims types with IAPath's online trainings. Unlock your adjusting superpowers. Go to iapath.com.
Are there particular areas that are hotter than others or more interesting than others? You just mentioned, the room for improvement in commercial, which I would absolutely say exists, versus, let's say, personal lines. Are there particular sectors or areas or new technologies that are of particular interest to you?
Yeah, so within XL Innovate, we're very much focused now on the commercial line space. As we view the Insurtech landscape, I think what we would call the Insurtech Wave 1 was really entrepreneurs who are focused on personal lines. So entrepreneurs who weren't necessarily from the insurance industry, but knew of insurance through their auto policy, their homeowner policy, or knew that they wanted to provide a kayak.com like insurance distribution play. What's really interesting us today is really understanding technologies that can transform and I think hopefully benefit the commercial line space. The commercial line space, as I said earlier, hasn't gotten as much play, but it's just as big of a problem. And so I think the complexities there are ones that need a lot of solutions. And so we're really excited about new plays within the commercial line space, whether that be in marine, property, reinsurance, you name it. So we're very much looking forward to investing in and digging deeper into those spaces.
Yeah, being a venture capital firm, you're used to use the right term. I won't even soften it. To use to failure in that it is venture. Most of the investments you have won't pay off the way you expect them, and you expect that a handful are going to pay off very handsomely and make up for the ones that don't. In your experience, both in insurance and outside doing venture capital, what are some of the biggest misconceptions, both for just startups but also for the insurtechs? When these startups form, what kind of misconceptions could they potentially have that could doom them to failure?
I think one of the critical things, especially as it relates to insurance, is understanding that it's difficult and the sales cycle within the insurance industry is incredibly long. So I think a lot of entrepreneurs come into the space and say, you know what, I can disrupt this and I can do this within the next year. And the fact of the matter is, carriers tend to talk in months or years when it comes to big decisions, whereas startups talk in days and weeks. So there's a big disconnect between the pace at which insurtechs are willing to move and are able to move versus where the pace at which carriers are able to move. So we really try to teach patience and understand that it is going to take a little longer within the insurance ecosystem to integrate, to disrupt, and to change. And so really letting the entrepreneurs know that the sales cycle is longer and that they need to make sure they're speaking to the right folks within the insurance industry, and so it's not leading to a dead end within a carrier, as an example. But it is interesting. Startups tend to have enough funding to keep the lights on for anywhere between 18 and 24 months. And those margins are awfully small when it comes to working with a carrier who, they can put you through a pilot or a POC or an experiment, and they will take time to get back to these companies. And so really, I think it's a balance between educating the entrepreneur, but also making sure that the carriers are incentivized to move quickly and understand that these insurtechs don't have the luxury of time. So that, I think, is probably the most critical thing we think of as it comes to seeing insurtechs succeed, and then hopefully moving forward within the incumbent relationships.
Yeah, that's been my experience as well. I think I've told the story on one of my podcasts where I was trying to get an insurtech firm into a carrier that I was working with, and we missed the budget cycle. And the ramifications were really big, because in order to do a proof of concept, we had to find cash, like little cash tin cups, hiding around different budget, different lines, and kind of pull those together to squeeze them in, which means we couldn't really do the full proof of concept. We couldn't really go full bore, which pretty much meant that the company lost a year trying to get into our cycle and fit in. And that was really tough for them to take. I don't think they truly understand it, which gets me to all the time, which I'm constantly preaching, to make sure these insurtech firms have the correct salespeople, because a professional salesperson knows that it's more than just getting them to close. There are timing elements and budget elements. So I would concur with you 100%. I just think that's a huge problem that a lot of firms don't understand when they're talking to insurance companies. I want to throw this question out at you. You talked about selling to an insurance company, but what about insurtechs that want to take risk? Like their thing is underwriting. What kind of mistakes could they potentially make when they're trying to figure out a way, or a better tool to do underwriting and better decision making? What kind of minefield are they navigating versus selling into the insurance sales cycle?
Yeah, I think it's a lot of the same discussion, though. It's really being able to communicate your message clearly to the insurers, so that they understand that in giving you the pen to write those risks, that you'll be responsible. I think MGAs it's obviously a very important part of the insurance ecosystem, but it's one that without the carrier buy-in, obviously there is no business there. So really making sure that you are articulate enough in communicating what it is you're looking to do, how you are differentiated from your peers is critical, because without that, you're one and the same. So I think really the messaging, to your earlier point of just making sure that you can sell your vision, and you can do that succinctly and have it make sense to the carriers is really important. Otherwise, you won't get past the front door.
Yeah. So how should the startups, the insurtechs, how should they be measuring their success? Because of what you just described, long sales cycle and other factors that are different than other tech plays. How do they know, even if they're involved, they have proof of concepts? How do they know that they're actually gaining traction, that there's they're on the right path?
I think there's a lot of appetite within the insurance industry to experiment. And I think that carriers are actually very interested to bring in new technologies and see how it might work within their organization. Where there seems to be a big gap, though, is moving from experiment, moving from pilot, moving from proof of concept to a true enterprise level contract. We've seen a lot of startups get stuck within innovation groups. And we call it within XL Innovate, get stuck in POC purgatory. So they're able to generate enough revenues to keep the lights on. So they're able to win a $50,000 contract here, a $100,000 contract there. But really, they have no ability to move forward and move beyond that and to scale within the organization. So without that ability to scale, and that scaling revenue, scaling product, the startup basically, while it has enough lifeline to stay alive, really has no ability to grow and really has no ability to use the model that they have in carrier A and bring it to carrier B. And so I know that within the insurance ecosystem and venture ecosystem, you hear the phrase getting piloted to death. We obviously call it something a little different, but that's a real danger. And so for us, defining success is seeing the ability to get beyond that stage. How can you sell into a carrier, as an example, and move beyond the token POC contract? And how can you really integrate yourself within the organization so that you are getting paid and scaling within the organization to really bring in an enterprise level contract?
Yeah, that's really interesting. It just goes to show you, like the tech area here is very different because of the ring around the walls that surround the industry itself. And I know a lot of tech firms want to tear down those walls, but there's a lot of stakeholders that go just beyond customer and product. Another one that I think rarely gets brought up is regulation. And, what's your sense from XL Innovate's point of view with Insurtech coming in? I've seen, like, on Twitter and LinkedIn, I'm connected to some regulators. They seem fairly open, but then I've seen them in practice, on the carrier and the broker side, and they have a particular job to do. What do you think of the regulatory environment that exists, and how Insurtech is kind of playing along with that?
At this point, we haven't seen regulation be a significant impediment to date. And I think what's critical so far, though, is that there's been an open dialogue between Insurtechs and regulators. And so where Insurtechs can be transparent and can sort of guide the regulators towards their path, there can be a constructive feedback loop that both can have, so that when it does come time to launch, as an example, it's not a yes, no, it's a, I know who you are, I know what you're looking to do, we've been speaking for the last year, let's make this happen. Ultimately, regulators want to protect the customer. And so long as they understand that the customer isn't being taken advantage of, and that really starts with the dialogue that the Insurtechs have with these regulators, then you can make this work. And I think what's really interesting too is a lot of the Insurtech movement has been focused around the customer. So, as these Insurtechs are really looking to make sure that customers have the right experience, whether it's through distribution, as an example, or just the user interface, they are going in a parallel direction there. So from that perspective, I think they're talking the same language. Obviously, where you've got a new product, or you've got someone who's coming in to trying to really disrupt the space, then that's where the dialogue and the foreshadowing really needs to come in place. And that's where the Insurtechs need to start speaking to the regulators early, so that there are no surprises when it does come time for them to really move and launch their product.
Yeah, no, that makes sense. Let's put on your vision goggles, peering out into the future, because that's what you do. I mean, you're basically making bets on the future for these companies and what they're going to be able to do in the future. What's the insurance landscape and ecosystem look like in 10 years? Anything surprise us, you think?
I think what's really interesting is there's a Bill Gates quote that says, we always have to overestimate the change that will occur in the next 2 years and underestimate the change that will occur in the next 10. So looking 10 years out, I think that we're going to really have to be creative and think about there will be significant differences. It won't look like it does today. I think that there are a couple of things that we think about as it relates to the insurance industry, and one is sort of the connected insurance policy. So I think a lot of insurance will be contextual and be very personalized for the individual. So that's something that I think we're very excited about, and that's something that gets driven a lot by IoT. So whether it's a wearable or something in your car or a home monitoring device, those are the steps that you need to have in order to really get there. And then the other trend that we see coming through is digital. Digital seems to be the buzzword of the day, and digital is obviously important in order to interface with the customer, but really to digitize the existing processes within the ecosystem as well. But I think as I take a step back and think about the insurance industry, I think that really customers' attitude towards insurance will change with this technology and with this movement. I'm sure you've had plenty of people on your podcast that have spoken about the low NPS scores for insurance. As insurance carriers have more touch points with their customers, have the ability to offer services for their customers, and have the ability to do this in a seamless, intuitive, and really frictionless way, then I think the attitudes towards insurance change as well. And so that's something that I think is really exciting. The insurance industry has the ability to truly change themselves and change themselves in the eye of the most important person, and that's their customer. So I guess as we look ahead, those are some of the key themes that we see going forward.
Yeah, that reminds me of the Metro Mile presentation when we were at Insurtech Rising, and the CEO talked about how because their device plugs into the same computerized system that the rest of the mechanisms of the car kind of deal with, and even auto mechanics kind of plug into the same thing. It knows when your oil's low, it knows when your tire has low pressure. And he was talking about how, they do and can send messages to insureds that have this device plugged in about stuff that's going on with the car. And it stopped me in my tracks a little bit, because I was like, okay, well, that's interesting. That is personalized. And I almost feel like that is a necessity, that the insurance product itself is not, it's valuable, obviously, but it's not valuable enough, and that it almost needs to be blended into other things so that the customer is getting a lot more information. What do you think of that?
Yeah, I think that those touch points are critical. And so, as an example, we've got a company called Notion, which provides a multifunction sensor for the home. And the sensor can do everything from telling you whether your door is opening or closing, or what the temperature is. But I think really interestingly, it can tell you about water events. So Notion has done a number of pilots and proof of concepts within insurance carriers, and over those pilots and proof of concepts, they've detected 600 water events. Half of those water events were users testing the device, so literally pouring water on the sensor to see if it works. And that's really interesting, because I think it shows user engagement. It shows that users want to use this technology and want to put something in their house, but they obviously want to have that interaction. More importantly, though, the other 50% of those water events were real water events. And when those events occurred, as a Notion user, they received a text message on their phone that said, by the way, you need to check your sensor. And in all cases, the customer was able to check the sensor, check the water event, and stop the leak before it resulted in a claim. And if you provide examples like that, then that makes for an extraordinarily happy customer, because they don't need to be out of their house for a couple weeks or months to replace the floor or the ceiling or whatever it is. And then you also make for a pretty happy insurer as well, because they don't have to pay the claims. So I think the ability for insurers to really better integrate into their customers' life, so the touch point isn't just at the policy purchase and at the claim, I think will only make that relationship better.
I agree completely. I had a Twitter conversation. It happened to be about Lemonade and their new policy, but basically, we got into the conversation of flood and perils and other things, and the gentleman I was battling back and forth with basically said, listen, what I want is, if there's a hole in my roof and water is getting in, I want some sensor that's going to tell me that that's happening, or tell you, the insurance company, that that's happening. I want you to warn me, and I want you to prevent the damage from actually happening. And while I think it's a little bit ambitious, it's, in the world of Amazon and Google and Facebook and getting things mailed to you in a day or two, that's the bar now. Like that has set the expectations, and people want everything, and the status quo when it comes to insurance just isn't going to cut it, and it has to evolve because customers demand it now. So I could imagine in 10 years that will happen. That will be completely censored, and the products and policies that we're buying around it are doing those kinds of measurements and quantification of risk and pricing, probably, right? Pricing per exposure, I would guess.
Sure. Yeah. Absolutely. That's certainly one place where we're hopeful we'll see a lot of change, and we hope that companies like Notion in our portfolio and Pillar in our portfolio are on the cutting edge of that.
Yeah. How did you end up in the insurance side of the VC world and not in some other tech area?
I got lucky. I was living in London working for Goldman's Alternative Investments and Manager Selection Group, and wanted to move back to the States. And I have an identical twin brother and a younger sister who are both in the Bay Area, and so the Bay Area seemed like the right spot for me. I was very fortunate to connect with Tom Hutton actually through Exeter, and basically pestered him for a number of months until he decided he'd give me an interview, and from there got very lucky. So prior to coming into XL Innovate, I didn't know a thing about insurance. I had renter's insurance, and that's about it. So it's been an awfully steep learning curve for me, but I feel very fortunate to be able to work with both Tom and Martha, and work with everyone within XL Catlin, and then also be in the Insurtech movement, or come into the Insurtech movement when I did, because the ecosystem is growing substantially, and we think that there are a lot of very interesting investments out there. So a lot of it is luck, and I just feel fortunate to be in the right place at the right time.
That's fantastic. Great story. You don't often hear people talking about how lucky they were to get into the insurance ecosystem, but I can see what you're saying, and you're actually on a very cool side because you get to see like all the cutting edge stuff. So I'm sure you are. I'm sure you do feel pretty lucky.
Sure. Yeah.
I'm going to try something new. I want to do a wordplay game. I'm going to throw out some words and just rattle off first thing that comes to the top of your mind when I say it.
Okay.
First one is blockchain.
Blockchain is a very interesting technology. But the solutions within the insurance industry, we've yet to see one that really is interesting. And I think in order for blockchain to work, it needs full ecosystem buy-in, and at this point, we haven't seen that yet.
Okay. Workers' compensation.
Plenty of room for innovation and for new technologies to come into the space. We haven't done anything within the workers' comp space to date, but that's absolutely an area that we will be taking a closer look at down the line.
Yeah. Okay. Commercial. I don't think they get easier. Commercial auto. It's probably the same thing.
Yeah. Can I say ditto?
Yes, you can.
I think that, okay, so ditto. I think that there are a lot of very interesting telematics technologies that are entering the space that can do a lot of good for the commercial auto space. We've seen everything from dash cams to accelerometers to sensors and everything in between. And I think context and being able to provide that context is really important for insurers going forward.
This is a new term I heard, but it fits. Reg tech, technology around insurance regulation. What do you think?
I think it's critical. Insurance is one of the most heavily regulated industries out there, and there's a lot of room to ensure that there are efficiencies, to ensure that that everyone understands what is out there. And absolutely, I think reg tech is exciting.
Okay, now the easiest one, hopefully. Phillips Exeter.
Phillips Exeter. So Phillips Exeter was a very important part of my my formative years, and I had an amazing experience in Exeter and made some truly lifelong friends, and really grew to be Exeter set my foundation and really made me who I am today. So I'm eternally grateful for the opportunity to attend Phillips Exeter, and for those of you listening who don't know about Phillips Exeter, check it out. Send your son or daughter there. It will change their lives.
Yeah, as we were talking beforehand, I live down the street. It's when people come and visit, I take them over to the Exeter area and we kind of walk around, and it's just a wonderful area, I imagine, to go to school. So let's stay on the personal side. So we've done the wordplay game. These are 3 questions I ask every guest on the show, just to put a face or a personality to the person that's actually talking, and not what they do on a day-to-day basis in insurance. So when you aren't working, Chris, what do you enjoy doing?
So when I'm not thinking about insurance and reading about insurance, which I do love to do, and that's not meant to be a tongue-in-cheek comment, I'm very fortunate to live in the Bay Area here, and the Bay Area has some amazing outdoor activities. So hiking, biking, exploring the redwoods, you name it. I feel incredibly lucky to be out here, and I don't miss the East Coast winters. So being able to do that year round is something that's really nice. And it's, as we spoke about a little earlier, it's hard to complain when you're saying it's cold and it's only 50 degrees outside. So you're really just embracing the California lifestyle.
There's another question. Well, I want to bounce out of personal just a little bit. Your email. Could you give the listeners an idea of how much work it takes to do your daily email?
Sure. So I produce a daily Insurtech newsletter, and if you'd like to sign up, feel free to shoot me an email. Hopefully that'll be on at the podcast at the end here. But the Insurtech newsletter is meant to give viewers or readers an idea as to what are the top 2 to 3 to 4 stories going on in the Insurtech ecosystem that day. And so really it's a lot of making sure that I have the right Google alerts up. If there is some editing involved there. And it's just trying to understand, what do people want to read about within Insurtech? What's important to them? On the distribution list, we have people from carriers, people from MGAs, we have venture capitalists, we have technologists. So what stories are important to them, and hopefully what will help them give them a better understanding as to what's going on. So there's a lot of curating. My job, fortunately, is to stay on top of the Insurtech ecosystem. So part of that is built in, which is nice, but it's a labor of love, and one that I'm glad that people are reading. But hopefully it does help them understand what's going on, and certainly helps me understand what's going on.
Yeah, I love the labor of love. I'm assuming that it's like a part-time job. It's that many hours.
It keeps me busy and keeps me out of trouble.
Yep, good. Okay, back to the personal stuff. What tools or techniques do you use to stay productive and or organized?
Oh, geez. What tools or techniques do I use? I'm someone who keeps a to-do list, and I keep that to-do list in. Given that I'm a millennial, I keep that on my phone. So I don't keep anything on paper. So I find that being fully digital is important, and that definitely helps me, keeps me organized. And really working with Tom and Martha closely, and just understanding what it is we're looking to achieve, and making sure I understand that, so that I'm working in the same direction that they are. But it's really keeping that open communication there. But I wish I had a good nugget or a good app, especially since I do live in San Francisco, say, hey, you should check this out. But I admit I'm a bit of a Luddite when it comes to those kind of things, on the organizational side at least. So self-discipline, I'd say, is probably the biggest tool I use to stay organized.
Got it. I mean, some of us Luddites are still using paper. So You're
Okay,
pretty far beyond me already.
That's my big suggestion then.
Okay. What books have been influential in your personal and or business lives?
So when it comes to reading outside of work, I generally like to really disconnect. And so I was a history major back in college. And so for me is reading something that actually doesn't have anything to do with insurance or sort of business for that matter. I think in reading history, though, you can learn a lot of lessons from a number of great individuals from the past. You can understand what it was that really motivated them, how they organized themselves as an example, or sort of what lessons they learned and that they were able to bring throughout their careers that really helped them move forward. So I'm someone who likes to read a lot about American history. As an example, I'm reading a book now on Ed Linsdale. But I'm sort of equal opportunity. I do, I guess just as a shout out to Exeter, I also do like some of the fiction books as well. And Dan Brown, if you haven't read him, he's written some good stuff in the past. So I'd point you in that direction as well. But from a reading from a business perspective, I confess I don't read that much on the business side per se.
No, fair enough. I can respect someone wanting to disconnect, especially when you're putting as many hours as you are doing what you do. So, Chris, the time has flown by. Thank you so much for coming on and sharing your insights on the newsletter, XL Innovate. How can people get a hold of you if they'd like to reach you?
So I think email is the best. And my email address is chris.downer@xlcatlin.com. So feel free to shoot me an email. I'd be happy to add you to the distribution list. And if you've got an Insurtech opportunity, happy to chat on it.
Awesome. My guest this week has been Chris Downer of XL Innovate. Chris, thank you so much.
Thank you.